Welcome to the channel. If you are looking for in-depth information on the differences between whole life and index universal life, you are in the right place. So Aaron, the reason that we're circling back to this topic is because in the video that I did a couple weeks ago, and by the way, if you haven't seen that video, you should check that out first. It's going to be a little bit longer and have a little bit more detail to it. This video here is going to serve to simply clear up a couple comments that I made in the previous video that were purposefully not crystal clear. So Aaron, I know that you've watched the video, and the major comment in question was we were comparing whole life to indexed universal life.
Right.
And I made the sneaky comment that I took the time to make the indexed life the same risk profile as the whole life insurance policy.
Yep.
And I didn't tell any of you guys watching what that actually means. And I did that kind of on purpose. I was hoping to catch some people in the comments that maybe thought they knew what was going on, and I was going to maybe point out that maybe they didn't know as much as they thought. But it's good to go back and just clarify what I was doing there. So I'm going to tell you up front, and then we're going to get into the illustrations that I showed in that video, and we'll just go through it one more time and make it really crystal clear. So Aaron, I know that you know the little trick that I did.
I thought it was a great video.
You thought it was a great
I
video?
liked it a lot. Yeah.
Thanks.
Level the playing field some. Get the assumptions out of the way, or at least maybe catch those who were making some big assumptions.
Yep.
Well, that was your intent. I knew that was your intent, and I thought you did it great.
Well, I like your word assumptions, because assumptions are exactly what's powering the illustrations themselves.
All of them, right?
All of them.
Yeah.
So whenever you look at a life insurance policy, an annuity policy, heck, even if you're looking at an investment portfolio, and if you see a ledger that shows your dollars growing, that growth almost all the time is going to be an assumed growth rate.
Yep.
It's going to be an assumption. So when I said I made the risk profile the same between the whole life insurance and the index life, what I did is I made the assumed rate of return the same mechanism.
Yeah.
In whole life, you have a dividend, and a dividend pays a yearly return. Now, Aaron, when do you figure out what the return's going to be?
The return in that instance is stated at the beginning of the year.
Correct.
You know what the dividend is for that year at the beginning of the year.
Correct. They tell you what the dividend's going to be.
Right.
You know it's a stated dividend. And when can it change?
Every year.
It can change every year.
Each year.
Okay, perfect. So whole life insurance pays a dividend. That dividend is declared annually, and annually it can change.
Yeah.
Does that mean it changes on January 1st?
Not necessarily.
Okay.
The policy anniversary annually.
Okay. So the policy anniversary. So on your policy anniversary, if the company had changed the dividend, let's say 3 or 4 months earlier,
Yep.
it would reflect on your next year policy statement / on your anniversary, the dividend would reset.
Yeah, exactly.
Okay, perfect. And on the index life side, I used the fixed account.
Not the index.
Not the indexed account. Okay. Now the fixed account, how do they determine the fixed account, Aaron? When do you know what the fixed rate is going to be?
Also generally based on interest rates.
Correct.
But to answer your question more specifically, annually, each year.
So you know what the return is going to be for the year
Yes,
if you choose the fixed account.
correct.
Okay.
Very similar to the dividend in the whole life.
It sounds similar.
Yeah.
Okay. When can they change the fixed rate? I almost said when can they change the dividend? When can they change the fixed rate?
Strikingly, it's the same answer annually.
That can't be true.
It is.
So every single year they can change the fixed account. Is that on January 1st?
No.
So at any time.
Anytime in the course of the year, they can restate that new rate. Yes.
Okay. So if my policy anniversary is on July 18th,
My birthday is July 17th.
perfect. Happy birthday. If my policy anniversary is in the middle of the year and they change the dividend scale at the beginning of the year, what happens to my policy?
On that next anniversary, you will know, hey, this next year it's different.
That sounds strikingly similar
Exactly the same thing.
to the dividend scale on a whole life insurance policy.
Indeed.
Okay. So that's what I meant when I said I did the work to make these two policies the same risk profile.
Yep.
I used the fixed rate with an index life policy, and then we used the currently assumed dividend rate on the whole life insurance policy. So Aaron, that means I showed two illustrations, fixed rate, dividend scale, both of them fully guaranteed.
Well, the word guaranteed isn't the word I would use because it's not actually guaranteed.
What do you mean?
Well, just like we just described or discussed, the fixed account on the indexed policy
Right.
can change every year.
Okay.
The dividend for the whole life policy can change every year. So guaranteed is a tricky word. It's guaranteed for that year.
Understood. That was a trick question.
Yeah.
Aaron, of course, knew the answer, and I, of course, knew the answer. I'm just playing some games. All right, so let's look at the two policies side by side and just kind of go through the numbers based on the fixed account and the whole life insurance policy that pays the dividend. The two companies that we looked at were One America and Lafayette Life. And I was actually pretty complimentary of both of the companies. I think they actually are both really good policies for whole life insurance. And if you were looking for the most growth out of the policy, I believe the Lafayette Life was giving a little bit more growth. If you were looking for the best guarantees, the One America was giving the best guarantees. But what I want to do in this instance is I just want to compare the cash values side by side, because we hear so much about how whole life is guaranteed and index life is not guaranteed, and index life is never going to perform the way that it says it's going to perform. Let's just pause right there.
Mm-hmm.
It'll never perform the way it's going to perform. Okay. I don't think that that's true, but let's just say it was true. Let's just say that it was true that index life would never perform the way that they show it to perform.
You say show it, you're referring to illustrations and hypothetical assumptions in
yeah.
the future. Yeah.
The indexed rate of return. Let's assume that the indexed rate of return is complete and total BS.
Okay.
Just for the sake of argument.
Sure.
My next question would be, okay, well, if the indexed account is total BS, how does the fixed account compare to the whole life insurance policy?
Mm-hmm.
So let's look at it. So here's our One America policy. We're paying in for 20 years worth of premium. We start out at $25,000, drop down to $24,000 in the 11th year. We've got a $1.2 million death benefit. Our net cash value in year 20, $681. If we go down to year 25, $842. If we go down to year 30, $1,039,039. So really pretty healthy cash values.
Mm-hmm.
And again, what I really like about this policy is when we look at the guaranteed ledger, the cash values are super strong. 110 plus 466 in year 20. So you're talking about 576 in guaranteed cash. In year 30, 600 plus 142, 742 in guaranteed cash. It's actually not much less than the current scale, $1,039,000 in year 30. So that's the comment that I made a couple of weeks ago about this particular product. Really strong guarantees.
Yeah.
I like that.
Yeah.
But let's look at the other policy that we discussed. So Aaron, when we look at the Lafayette Life policy, it's a similar story, but the cash value is a little bit stronger on the current side. So when we look at the 100% of current dividend scale, in year 20, we have $710,000 in cash value. Again, it's the same premium schedule, 20 years of payments. In year 25, $875,000. In year 30, $1,074,000.
Strong.
Strong.
Yeah.
Pretty close to the One America policy. The guarantees are quite a bit less, $474,000 in year 20, $515,000 in year 25, and $557,000 in year 30. So quite a bit lower on the guarantee side. The current side, obviously higher, $1,074,000. I think it was at $1,030,000. So those are the whole life policies. I have nothing bad to say about these policies. In fact, if you want a whole life policy that has strong guarantees, both of these companies would be great for that.
They do what they do well.
That's exactly right. They do what they do, and they do it well. So let's look at our two index policies that we went through. In fact, I'm not sure if I went through two. I think I did. I think I showed both Symetra and Allianz. Both have a really high fixed rate. That's why I used them. And it's pretty compelling. So here's the Allianz policy. Let's get the highlighter out. We're looking at year 20. Again, it's the same premium going in, 25 for 10, then dropping down to 24. Year 20, our cash value, $770. The One America had a total cash value of $681. in the 20th year, so $90,000 more. The Lafayette was at 710 in year 20. So we're talking about an additional $60,000 in the index policy or an additional $90,000 in the index policy using the fixed account, which you said was guaranteed.
For that year.
For that year. Okay. Using the fixed account that's guaranteed for that year,
Yep.
same exact situation
Yep.
as the whole life insurance policies that give you a dividend for that year, and they reset it every single year as they assess the market, interest rates, company profitability.
Yep.
So it's the same risk metric.
The same risk metric. And also, as we noted earlier, the whole life policies did what they did well. And the index universal life policy did similarly well in what is not its maybe best attribute.
That's right. So the index policy is not necessarily designed to use the fixed account.
Right. That's what I mean. Exactly.
Yeah, it's designed to use the indexing account. What I find so interesting is that if you decide to use the fixed account in an index life policy with the right policy that has a large fixed rate and a low fee structure and a good design, now those are three caveats that are important.
Big ifs.
But if you can find those three things, you can essentially compete with two of the better whole life insurance policies that are out there that are really large in the infinite banking, be your own banking space. And I find that compelling. Now, the index life policies are not going to have the same guarantees that the whole life insurance policy has. And we were pretty clear about that in our last video. So we don't need to bang on that drum, but I'd like to say it again because it is important. The index life policy is not going to have the same guarantees as the whole life insurance policy. But I don't want you to just think that it's one company. It's the Allianz policy that is the only one that works. And I want to show you a second policy because I think it's important to know that it's not just one. There's multiple that kind of fit this bill.
Yeah, absolutely.
So here's the Symetra policy. Let's scroll down to the ledger and show you exactly what I'm talking about. You can see it's the same 25,000 dropping down to 24, 20 years worth of payments. And our account value in year 20, $796. So this actually has more than the Allianz policy. $796 using the fixed rate for 20 straight years, same risk profile as the whole life. People are going to say, yeah, but the fixed account can change.
As can the dividends.
Exactly. Yes, they both can change. That's not something to be scared of. That's just how the policy is built. Okay. It's just how both of them are built that way. If they couldn't change, the fees would be 4 or 5 times higher.
Mm-hmm.
The only reason that they're able to stay in business is because they can change, because there are guarantees in these policies. And if all of a sudden interest rates go to 15 or 20, or if they go to 0 and the company is held to some kind of guaranteed standard, all of a sudden none of it works.
It's all broken at that
It's all broken at that point. So let's continue on. I want to show you the values here at year 25 and 30. So 25, $1,021,000. Year 30, $1.3 million. That's about $300,000 more in year 30 than both the One America and the Lafayette Life policy. So if you're looking for a cash building life insurance product, and you want the product that's going to give you the highest potential upside, I don't see any way that you could say it's a whole life insurance policy.
Agreed.
And that's not a knock on whole life insurance. It goes back to what you said earlier. They do what they were built to do, and they do it well.
And that's the basis of your first video and the basis of our conversations on a weekly basis, is just that anyone saying that this product is the best product just across the board, you should buy this and not that, without knowing, a person's goals or their desires or their expectations, their timing, etc. Anyone who's saying that already is setting you up for problems.
They've already lost the battle.
Different products do different things well for different people who want different things.
So what does whole life do well?
Guarantees in a whole life are going to be guaranteed death benefit amount, a guaranteed cash value amount, and a guaranteed premium schedule.
And the dividend is the same as the guaranteed cash?
No, it is not.
It's not.
It's not the same.
We keep beating this dead horse. And the reason we're beating it is because we see so many people out there in the YouTube, Twitter sphere. Oh, it's X now.
X. TikTok even.
TikTok, Instagram, talking about whole life insurance and the guarantees, but then they never actually show the guarantees. What they show is the current dividend scale. Okay, so those are not the same thing. The current dividend scale is not the guaranteed cash value. The guaranteed cash value is typically going to have a rate of return around 1%, although the One America policy, much higher. I believe it's around like 3% guaranteed, which is pretty darn good on a whole life insurance foundation.
It is.
So, Aaron, I should probably show the great people watching the actual ledger that shows that I did in fact use the fixed account. So let me just do that real quick here. So here we are, we're back in the ledger. This is the Symetra policy. And when we go to what index account did we use, that is 100% in the fixed crediting rate. And then let me just real quickly do the same thing for the Allianz policy so that you know, again, all the money is in the fixed account. We'll scroll down to the ledger. And here we are, illustrated options, 100% fixed allocation. So all the money in the fixed account in both policies competing with the whole life insurance policies. But we made mention that that's not the reason that you would actually buy the policy. So let me just real quickly show you what one of the two options looks like if you choose the indexing account. Now, Aaron, is the indexing account guaranteed?
It is not guaranteed.
So what you're telling me is the indexing account's not guaranteed. And the fixed rate is not guaranteed for any longer than 1 year.
It will not fluctuate during that year. Beyond that, it is 100% not guaranteed.
Okay. So all of these projections are projections. Whether it's a whole life insurance dividend, an index life insurance fixed rate, an index life insurance indexing account, no matter how we decide to do this, if it doesn't say guaranteed ledger, it's an assumed rate of return.
Absolutely.
Okay. Just making that clear for all the great people at home. So this is the indexed example where the money is not in the fixed account. It's in the index account. I believe we're showing something like maybe a 6.5% rate of return. 6% is the rate of return here on this particular policy. We go back to the ledger. Year 20, $932 in cash. Year 25, $1.295 million. Year 30, $1.8 million.
Is that a $500,000 difference, I think?
$500,000 difference over the Symetra fixed account, which was about a $300,000 difference over the dividend scale on the whole life.
So we're talking
policies.
Almost double now.
Almost double, about $800,000 more if you elect the indexed account and can earn around a 6% rate of return. $800,000 more. If you simply put the money in the fixed account, which is the same risk profile as the whole life insurance policy current dividend scale, $300,000 more in 30 years with the same premium schedule and the same risk.
Apples to apples.
Apples to apples.
Yep.
Now, if you have to have guarantees, then
whole life every single time.
Then the choice is clear.
Yeah, it's easy.
If you have to have guarantees, the choice is clear. But we're doing this video because oftentimes when it comes down to it, the guarantees are not as important as the current or the potential. And so that's why we want to talk about it. So if you've ever considered cash value life insurance as a way to build your wealth, protect your assets, and you've come across this debate of whole life insurance versus index life insurance, you've probably noticed that the arguments are coming from very entrenched, well-defined sides. And it's not very often that someone comes and tries to bridge the gap or provide a comprehensive overview of the two solutions. That's our goal. Our goal is to provide a comprehensive overview of the two solutions. There's a place for both whole life and index life, but you have to know how they work and you have to know what your goals are. If you don't know what your goals are, then how could you possibly hope to choose the product that's going to fit your needs, your wants, your wishes as efficiently as possible? It's just not possible. So if you'd like to have that discussion with us, you should check out our website, leveragedwm.com. Up at the top, you can see the book a meeting. It'll take you to a quick quiz where it'll ask you a few questions and you get the opportunity to book a meeting with myself, with Aaron, with someone else on our staff. And we can answer any and every question that you might have, whether it's about cash value life insurance, whether it's about annuities, whether it's about estate planning. If you have a question, we've got an answer for you. Or if you're talking to someone else on the team and they can't answer it, they'll send you to myself, they'll send you to Aaron, and we can absolutely help you. So go to our website if you have further questions. If you want to start a discussion, leveragedwm.com. Up at the top, book a meeting, and we look forward to talking to you soon. Take care.